from centralized to decentralized. And I'd just like to introduce the session lead or moderator, Alan Wuncha. He's the CEO and Chief Token Officer of Token Funder, and he will kick off and introduce the panelists and get into the discussion around what are the opportunities and risks in today's market here in DeFi, the latest trends and updates. So over to you, Alan.
Thanks so much, Greg.
Thank you.
Great to be here with everyone, and thanks for that introduction. I will say that through Craig's leadership, I think we're looking at our 6th or 7th year in dealing with blockchain and crypto type content and issues, and it's ever so important even today. So thank you for giving us this opportunity. I'm delighted to have a global panel group with me today. I'll have them first introduce themselves individually, then we're going to get into the discussion, and we've got a wide range of topics related to decentralized finance. Please kick us off with an intro, Pam, then Daniel, then Rico.
Hi, everyone. Happy to meet everyone here. My name is Pamela Draper. I'm the president and CEO of a company called Patino Payments, which is a payment service provider in Canada. We provide fiat payment solutions online to companies that operate extensively in the online gaming and cryptocurrency and blockchain space, although we operate in other industries as well. And Patino Payments owns a subsidiary, which I also run, called BitBo Inc. BitBo is a crypto asset trading platform in Canada. We're registered with Fintech, and we're regulated by the securities commissions in every province and territory of Canada. Prior to moving into crypto, I spent 14 years in traditional finance and corporate and investment banking. So looking forward to a discussion today that contrasts traditional finance and where we're going in DeFi and decentralized finance as well.
Hey guys, so I'm
Jeff.
Daniel Goldman. I'm co-founder, co-CEO of Unbanked, unbanked.com. We facilitate white label solutions for other fintechs who want to provide sort of crypto to fiat or fiat to crypto rails. We're best known for crypto debit and credit cards. We're currently issuing cards in the United States and 27 countries in Europe and the UK, soon to be Latin America. And we currently also offer bank accounts that are crypto friendly. Everything's crypto friendly in 165 countries around the world. And we've been around for 5 years, based out of the United States.
Hi everyone, Rico Pang from Unity Ventures. We focus on funding and solving the most expensive problems in the emerging technology sector. Prior to this, I was into corporate and supply chain businesses in Southeast Asia, and been interested into deep tech, digital economy, smart cities, and social impact ESG ventures.
Thank you very much, Rico. So we've got a global perspective, a set of global perspectives. So we've got Canada, we've got US and global covered, as well as Rico, I heard you were as well in Dubai, and in addition to your Southeast Asia roots. So why don't we kick things off? And on the topic of democratization of financial services and financial inclusion, so how can DeFi initiatives such as decentralized lending, savings, and insurance products improve financial inclusion and empower traditionally underserved populations? Maybe Daniel might want to kick that off. And
yeah, I'm happy to. And I already told Alan, beware. I'm coming with a fastball. And so I honestly think, and this is from an American perspective, that from my point of view, the biggest challenge is the regulatory framework. We have technology solutions for things. There's new frameworks that we have already been tested over and over again that have worked. Some work very well and some have been very poor, and we've been iterating and seeing a lot of development within the ecosystem over the last many years. But it's really hard to create solutions when at every corner you're being told by the government you can't do business, or we're going to make it difficult. Now, every country is different. In Canada, from my understanding, there's a small number of banks. Considered to be a little bit of an oligopoly from people I've talked to there. That's not uncommon. US, we have a lot more banks, but not a friendly environment for crypto. Some of that's earned, and some of it's just fear of the unknown and fear of something different. And so if you really want to onboard all of these people to allow for what I view as unbanked in DeFi, which is powerful, it's really about people being able to hold their own money. It's digital cash. It's not about Bitcoin, although I love Bitcoin. I believe in Bitcoin. It's not necessarily about Ethereum, although that will be a very powerful infrastructure that will facilitate many things we don't even really understand or realize today that'll automate through AI and other things. That'll all be a big part of the landscape of what the future looks like. But none of that's going to happen if we can't allow for the market, allow for the free market, the private market, to operate in a way where it can, through proper disclosure, right, and proper information, to let the market do what it does. And I think right now the biggest blocker is it's hard if you're in the blockchain or crypto ecosystem and DeFi. There's a lot of rules that are being put on there, and it's all being backed by the concept of, and I'll stop here. There, if you're a regulator, they think that you pretty much only engage in 3 different types of business: money laundering, drug cartels, and weapons trafficking, and that those are the only 3 known use cases for our industry. And outside of that, there's nothing legitimate. And I think that that's wrong, and I think that's got to change. Daniel,
quick question for you, follow up on that. You saw the Coinbase initiative, the lending initiative, and that's kind of part of this first set of questions. Did you follow that? And what? And I mean, you jumped in with the regulatory framework because I think that makes total sense. They ended up being asked to take that product off, right?
It was staking. It's staking. Now, and here's the thing, and here's the problem. Here's the problem. And I know we're going to talk about regulatory later, but to me, it takes over everything. I mean, it really does, because if you can't get past that, you can't do business. And they say, like in the US, they say, well, just come into our office and talk to us. Anyone who's done that, and I found firsthand, because we're on the SEC's website and we've submitted a lot of documents, it is not friendly. There's not a, hey, let's do it the right way. We just want to protect people. It's not at all. Coinbase is my understanding, and it all depends on how you do it. If you're doing something like what Celsius and BlockFi did, where you become the custodian of somebody's money, then we have a problem. We have a problem because now you're a custodian, and there's a lot of risk there. And we saw that with BlockFi and saw that in Celsius. My understanding of Coinbase's product is that it was actually done differently. Now, it all matters about flow of funds. It all matters about what is the product, but just something being staking doesn't make it a security, doesn't mean it's going to be, a problem for the consumer.
Pam, what's your take on barriers to entry for DeFi and inclusion?
Yeah, I think I'm split on this, and Daniel encouraged healthy debate, so I'll go there. I think we have to be really careful, because I think that at a certain level, and I've always worked in a regulated background and continue to do so today. There was a brief period of time when I started in crypto that it was unregulated, which is the only time in my career I've operated in an unregulated space. So you kind of get to see both sides. And there is a certain amount of regulation that's absolutely required to protect humans from themselves. There's a certain amount of humans that without those barriers or guardrails in place seem to always hurt themselves. And we look to protect them, as well as the society more broadly. But I think what we need is, and I think every jurisdiction, including Canada, although Canada's been fairly progressive in putting in place a regulatory regime, I think you need clear regulation. So you need the regulators to put up information that says, this is what we're looking for you to do. We need consulted regulation. So going into the industry and say, as regulators, they've already only ever worked in a traditional finance. There's a lack of understanding and a real learning curve that they need to come up in order to be able to properly regulate our industry. So there needs to be some industry consultation. There needs to be some industry people either advising or working with the regulators so that they can develop informed regulation. And then they need to put that regulation in place as soon as possible. Like I said, in Canada, we do have a regime we can follow, and running the businesses that I'm in, I'm thankful for that, because I know what I can and cannot do, and I know what I need to do in order to stay in business. But in the US, for example, as you guys alluded to, it's not as clear. They're just developing it really now, and they're sending out a bunch of enforcement notices and actions while they're developing it, which I think would be very difficult. I don't know how you operate in business where there's not clear organization or not clear regulation, but at the same time, they're enforcing against you for violations of regulation that's not really that clear.
I want to jump in on what she said. I don't disagree with what you were saying, Pam. But I'll say that, and by the way, there's the fact y'all have a framework. There's a reason I've always referred to the Canadians as the smarter Americans, and it's because you guys, frankly, do it a lot better than we do in a lot of ways, more reasonable and all these other things. But I don't disagree with a lot of the stuff you were saying on the regulatory front. But there is a point where it can obviously go overboard, but also it's beyond the regulatory stuff. It really is, it can be just a product. It's a little confusing to deal with things like wallets. If you want to get into DeFi, in order to truly be in DeFi, if you think about what crypto's been the last 5-10 years, it started off as a decentralized solution where you learned about Bitcoin, you learned how to mine it, and you learned how to hold it in your own wallet, and there weren't exchanges. And then there was Mt. Gox, and it was the first exchange, and there was this big blow up because it was a custodial environment and everything went sideways and it got hacked. Then people realized, oh, we need to hold our own crypto, because if it's not your key, it's not your crypto. And then a lot of people got into crypto through Coinbase and others, and newbies and people who don't understand anything about it, but they're interested. They look at it as investment, and they end up not changing their behaviors. They keep all their funds sitting on this centralized exchange. And then we have the FTXs of the world, the BlockFis of the world, the Celsius of the world, Voyagers of the world. Like, it happened over and over and over again. So for me, DeFi is truly about you actually being the custodian of your own funds and actually controlling your own fate. And now, by the way, the world's most traded cryptocurrency is the digital dollar, right? It's important to understand that. Like, it's stable coins too. That's DeFi.
So do you have in the US, how is the participation in the DeFi space, if you call it? Because, be outside, the centralized platforms.
It's still early. That's what's exciting. It's extremely early. What's amazing is that the information is all public. So you can see how much information, like how much funds are. Let's put it this way. Everyone's heard of Coinbase, but not everybody has heard of Uniswap. And Uniswap does more daily volume than Coinbase, and it's not even close. So DeFi is 100% the future, but the original question, I don't just want to hammer on the regulatory front, because I could, as an American, I could get going on that all day long. I got Fight the Power from Public Enemy in my head right now. But DeFi, one of the challenges is, it's like, what's unique and different about it is you got to create this cryptographic. Why is it crypto? Okay, because I would say crypto is digital dollars, it's CBDCs, it's all the stuff that Bank of America says they're for, but they hate crypto, but they're for the CBDC. Elizabeth Warren hates crypto, but she's for CBDC. The G7 and Christine Lagarde hate crypto, they're for CBDCs. All of that is crypto to me, because if it's got cryptographically protected, data where that means you have to create a wallet and you have to have a passphrase, and all of that is different. All that's unique and different than what you may have had to do before. And I think that's going to be a major barrier to entry for normal people. It needs to be as easy for grandma as my 7-year-old to be able to, open a wallet and to be their own custodian.
I think you absolutely hit on it. Education and knowledge of what's available is extremely important. A good point about the Uniswap volumes. Obviously, that's kind of global volume, right? So where
that's
it comes
DeFi.
from,
but that's DeFi.
And there you go. That is DeFi.
And just to pull at a point there, because we all work in this space, so we're very familiar. When you say Uniswap, we know what that means. For anyone on the call who is less familiar, it's similar to how Coinbase is a centralized exchange. Uniswap is the largest decentralized exchange, which is a use case of decentralized finance. I think just to bring it back to your original question, Alan, which was, how can DeFi initiatives such as lending, et cetera, improve financial inclusion? I think Uniswap is a good example of that. It provides more competition. So anywhere in the world where you introduce more competition, you get more efficient markets, which serve a broader population better. So you have these centralized options, which are great. If you want that, you can have that. But then you have these decentralized options or DeFi options within the financial space as well.
Perfect. Thank you. There's so much to talk about with respect to the way that Uniswap set up and other DEXs, decentralized exchanges operate. But why don't we kind of move the ball a little forward here and speak to kind of interoperability So when we think about traditional finance, some of us are now calling it TradFi. I came from a banking background, now been in crypto for about 8 years, and see the power of DeFi. But there's got to be some sort of integration happening, right? Because we still have an existing financial kind of system. So maybe I'll touch on this with Rico. You can touch on this from the perspective of integrating DeFi potentially into the traditional financial institutions, and how could they interact with the DeFi platforms?
Sure. So we see the switch of a lot of people moving from CeFi, centralized exchange, to start using DeFi. And then we saw a lot of problems of people learning how to use DeFi properly. And one of the major concerns that we all had is, why do not people have to do KYC when they use decentralized finance? They can create multiple wallets and they can transact using different addresses, and they can stay anonymous. And that is the biggest question for most of the regulators, like, how can you do that? And we don't know who transacted this amount to this two addresses. How do we track them? Who is it that's transacting? That raised a lot of questions by the regulators. However, that also possesses one reason why it's being used for, because more than 1.7 billion people on Earth who doesn't even have a bank account. And if they do not have a bank account, how would they actually do a KYC? And that's the questions why the inclusivity of DeFi is so important, to include people who are not even having a proper national ID card in many regions of the world. So more than 1 billion people do not have an ID card. And that's a number, that's a data, not a statistic. So in order to include more and more people in the financial world, especially traditional financial world, where you can only have a bank account when you have a national ID and do a KYC, DeFi is a way forward. And many people will ask, why do I need to use DeFi? I am living in the tier 1 or tier 2 city in the country where I have bank accounts. But what about those people who do not have a bank account? What about those people whose their national currency drop 90% of the value? When they have 1 million, it became like 100 grand or even lesser than that when the country will go bankrupt. And that's where they are using DeFi to transact now, because there's no regulated wallet in their own country that allows them to transact using their own currency. This is why they transact in other cryptocurrencies. So this is what happened over the last 10 years. We saw what happened to Venezuela. We saw what happened to Argentina and many other countries that actually lost their value in their own currency. And we foresee that happening in many countries as well, as we see bad management of treasury, overprinting of monies, and bad management, pretty much, man-made errors. And this is why people are losing trust in their own financial system and rather believe in the DeFi, where they own their own asset and their wealth, rather than putting into a centralized institution like the bank or central bank. So this is where we see a lot of integration where, hey, actually to use a centralized financing product or a decentralized product is up to you. You have the right. And in order to use it correctly, as what we discussed earlier on by Daniel and Pamela, is how to you protect it. And the knowledge of using that is so important. Are we going to create a seed phrase? What is a seed phrase? How would my grandma or grandpa or father or mother who's 70 years old or older learn to create a seed phrase as a password and not losing them? We always forget our password to log in sometimes. How do you make it like interoperability with another system where I want to transfer money from this wallet to that wallet, a digital wallet, and not having any problem at all to use on a day-to-day basis? So we are looking at a lot of mini apps and in-app integration coming up in the market, where most of the DeFi products are actually integrating with many digital wallets. And that's a good sign that we are seeing now that, hey, I can transfer assets around easily from my 5 wallets. I can move into one wallet. I can choose which wallet to transfer credits to use to purchase things on virtual or over a counter using a Apple Pay or integrating the credit card with this DeFi wallet. So all these things are happening. That's something that we are very, very excited, and that's what we are looking to invest into this sort of infrastructure to support the transition from CeFi to DeFi. We are also looking into M&A, where we're looking into a hybrid model of CeFi, right? Where you can actually have a password protected account, but you could also can have a seed phrase or a 2FA to protect your DeFi wallet. So when you lose your password or you forget your password, you can always reset it. So those sort of things are something that we are looking at in the market. DeFi hybrid custody is also something that we are also very interested to invest into, because that's where we see a future where the custodian will be a hybrid model and a DeFi model, where the liquidity providers will be protected. We look into many of our investors now. In just a few weeks' time, we have a few billion of Ethereum custody liquidity pool being releasing and expiring and to be renewed. What are those things? We actually have a lot of people with crypto holding, providing their crypto as liquidity providing to the market, to people who want to borrow. So it's a similar concept where banks are borrowing to people, lending, but it's already happening in our crypto industry, but not many people are aware of it. The interest and the return of lending and borrowing it is much more higher as a custody liquidity provider. So those are products can be a different business model that can be opened up to more people to be participating in it. And which is why if you put the money into a bank and you earn peanuts interest, why can't you just convert into crypto and then provide it as a liquidity provider to people and you make much higher returns? Just an example. Right.
Can we just, maybe we can touch on an example before I pass it over to the other panelists. Are you considering, as an example, the use of Aave and Aave as that one place where you can in a decentralized way lend your crypto, and also seeing how Aave potentially could be integrated, or the concepts of Aave being integrated in a hybrid way with traditional financial institutions. Are you seeing that, Rico?
Yes, that's something that we are looking at a lot in many new DeFi platform. But my question is, how do they balance the book? How do they manage the liquidity pool properly so that there's always a back asset towards those liquidity pools? So those are the questions that is being raised by many of us as investors and regulatory enforcer.
Okay. Daniel, did you want to jump in?
Well, I'll just say on the DeFi side, I think of like infrastructure and real-time settlement. And there's a lot of stuff under the hood that we don't really, we think everything is real-time settlement. Like when you go and swipe your card at the grocery store and everything's like, okay, cool, it's approved and everything's great. What you don't understand is under the hood, or first of all, how many different companies are actually servicing you to make that transaction happen is significant, and there's a cost to it. But there's tremendous settlement risk that exists that creates, you have to have insurance, other things, because there's no such thing as real-time settlement. And I actually think, and that's because you have centralized systems that are doing their best, that are designed to solve problems as cheaply as they can. But what I love about blockchain is that you can actually facilitate solutions with real-time settlement. When Robinhood had that massive problem back in the day, seems like forever ago, and they were having issues with liquidity, and under the hood, you think everything's all operating very smoothly, but you find out later that some deals are not actually settling for several days. So I actually think that blockchain, and that means DeFi. To me, it's value, right? Transferring on a digital rail, on a new rail, and that's allowing for parties to do things real time, whether that's JP Morgan with what they're doing with their own blockchain, digital dollar, real time settlement across different banking solutions. I think that's going to play the role of solving problems on the back end for things that most people don't even realize exist.
Yeah, I think there's a lot to unpack there. I'll tell you what, take a look at the time. We've got a few more kind of meaty topics. We've touched on the regulatory landscape, but let's do it one more. Let's do a little deeper dive. And Pam, when you think about DeFi and some of the regulatory challenges that we have or that we might have in bringing DeFi to all, you know, kind of the broader public, where do you stand, and what do you see are some of the key challenges?
Yeah, I think there's really two challenges, and I think that they're tied together. So I think the first challenge is a lack of regulation, ironically, or a more unclear regulation, as we sort of said at the outset. And what that results in is people not really knowing how they should or ought to operate their business, or bad actors going in and doing whatever they want and not being enforced upon. And then the outcome of that lack of regulation or unclear regulation is that you have blowups from bad actors or from platforms who aren't, or protocols that aren't properly protecting themselves and their users. And then when there are those bad outcomes like Mt. Gox or like some of the DeFi hacks that we've seen, then you have retroactive knee-jerk reactions from the regulators globally to say, oh, shoot, we didn't protect our people against that the first go around, so let's quickly put something in place to ensure that it doesn't happen again. But when that happens, it's often not in an organized and well thought out way. So that then the lack of regulation leads to regulation that might be unfit for the space, or might not make as much sense as it potentially could had it been started earlier, more well thought out, more consultative with the industry, so that you have people, because the regulators don't necessarily have expertise in decentralized finance and blockchain. Of course they don't. It's not what they've done for their entire lives. So there needs to be industry experts involved in helping them make these regulatory decisions, particularly around the outset of forming regulation, so that we end up with something that not only protects consumers, but benefits them as well by letting these industries, these new emergent industries, thrive and become what they can be. I think if you had limited the internet so much in its first early days that it couldn't have grown to be what it is, the tool that it is today. We need to make sure that we don't put up too many roadblocks and that we don't stifle the innovation that we want to have happen.
Right. I think before I pass it over to Daniel, maybe a quick follow up on that. Have you been following some of the discussions or future potential regulation around wanting everyone to declare what their self-custody wallets are, and kind of self-identifying those to whenever they have the kind of on-ramp, off-ramp with centralized exchanges, and declaring that they own that self-custody wallet. Is that part of this whole equation? Because obviously that speaks to AML and KYC, but on the other hand, the benefit of having DeFi is that it's very efficient and doesn't necessarily always have to go through the KYC. I don't know if you had thoughts on that or been involved in those kind of discussions.
Well, it satisfies a very specific part of regulation, and that is the travel rule. So the travel rule is an existing rule within traditional finance, where it basically says that as the money is traveling, you need to know who's touching it at every part. With crypto, that's obviously very hard to track, because the wallets are every transaction in the blockchain is 100% visible and viewable to anybody who wants to watch it anywhere in the world. But all you get with that is the wallet address. You don't get who actually holds that wallet address. So by declaring that you own your self-custody and that your name is attached to that wallet address, they're really trying to satisfy the travel rule, which was put in place by FATF, the Financial Action Task Force, which is a global organization, and countries that prescribe to FATF have to adhere to this. So that's our industry trying to react to regulation that's global, but also enforced within our own countries, in terms of how do you solve this problem, which isn't necessarily easily solvable in crypto as it stands today.
Daniel, thoughts?
I have a lot. So let me say that, I agree with Pam earlier about, look, I started off this whole trek, I've been doing unbanked for 5 years, and I've always said, I'm a very pro-regulation guy, but when you get into it, that's fine. What you're saying is we agree there's gonna be rules of the road, but when you start to realize what it means to be regulated poorly, right? Like if Alan, if you're my regulator and you're really bad at your job and you're not effective and you just keep your poor, and that doesn't mean Canada has bad regulators. I'm just saying if you're operating in an environment
Sure.
that has bad regulators that are either underfunded, so they're under-resourced, there's a law passed and the regulators are fine, but they don't have the resources, or the law is stupid because there's a fear or whatever, it makes it really difficult. And so you've got to have good regulations. And there is no such thing as a $1 trillion industry that doesn't have regulations. But if we're really honest about it, if you really peel back the onion, this whole thing is coming down to, it's more about control than anything else. If it was about like, there's consumer rights, and then there's consumer protection. So we've doing all this stuff under the guise of we've got to, and Pam said it herself, sometimes you got to protect people from themselves. Well, that's true.
Mm-hmm.
Sometimes.
Mm-hmm.
Okay. But we've gotten to the point where what we're doing is we're protecting people from being able to make their own decisions for what they think they want to do for themselves. Now, if you want to send as evidenced by this, and this doesn't necessarily mean Canada, if you want to send $15,000 or $20,000 to FanDuel, go on and vote on your favorite hockey game. You guys like hockey, right? Or in football in the US.
For sure.
But you try to send $5,000 to Coinbase, we might block that transaction. So we've really got to be thoughtful about what does it mean. And I really firmly believe this now. Like we've lost our way. We have lost our way so much. The government exists because they're supposed to represent the people, and they're on behalf of the needs of the people. And sometimes, look, you get somebody in there and they get in power, and you don't always agree with everything. But on financial services, with something like DeFi, we have lost our way so phenomenally to the point to where they want to know every single thing that happens on the blockchain. When, by the way, and I knew you want to say something, Alan, this is fully trackable information. If you're trying to track criminals, they can track. Go ahead.
I want to go there with you. So let me throw that at you, because we didn't talk about this beforehand. But DeFi primarily protocols, right? Protocols, smart contracts that can largely run autonomously.
That's right.
Tornado Cash was implemented, pretty much runs autonomously, but we saw the very clear kind of government decision to say, that code is illegal, and for anyone to interact with it ended up being basically blacklisted in their use, and frankly, other platforms, other DeFi platforms, or other providers of cryptocurrency, including, I believe, and I could be corrected, Circle and USDC blacklisted some accounts that used Tornado Cash. So that's a can of worms, but I feel like that's where you could have been going, right?
No, I wasn't. I really even wasn't, because you could sell me on the idea, even though it's a privacy issue, it's a privacy debate. And then, where do we all land on this? You could sell me on the idea that a person who uses Tornado Cash is demonstrating intent to commit a crime potentially, because what they're doing is they're obfuscating their public address. Now, you could have privacy advocates that are firmly on the privacy side to say, listen, I just want privacy. I can understand that's a good debate to have. Tornado Cash, though, if it is high, let's put it this way, you're more likely to be a criminal if you use Tornado Cash than if you use Coinbase. And I think there's a big problem. I'm not talking about the Tornado Cash of the world. I'm just talking about they want to regulate Uniswap, which is just the infrastructure of protocols that has nothing to do with trying to obfuscate transactions. It's just people trying to do business. And the fact that we're trying to control every single element of what human beings do, which, by the way, you know what the most anonymous form of payment is? It's cash.
So I didn't want to throw that as a zinger at you, but I will say from personal experience, one of the discussions I had once, and I won't go into details around the DeFi situation, is our regulators were highly concerned about people paying their fair share of tax, and that's a legitimate concern, right?
Legitimate concern.
Legitimate concern. So, participate in DeFi, but how do we know you're going to end up paying your appropriate share of tax? And that was a very real securities conversation I had some years back.
But that goes back to control. So what we're talking about is we are now talking about there is a time where the pendulum can swing too far in either direction. We don't want to live in the wild, wild west, and we don't want to live under, and look, I've been very critical of the Chinese government, but if you really are honest about it, I think the United States is the best country in the world because I'm from here, and I'm sure Canadians think it's the best country in the world too, and people from Sweden, the same, right? Yeah. But if you really boil it down to it, when it comes to controlling the financial system, I challenge anybody to differentiate the visibility into the financial system between China, Canada, the US, Europe. We're supposed to be the free society, but there is no discernible difference when it comes to actually tracking and tracing their citizens' behavior financially. And I find it so offensive because we've allowed the pendulum to swing to a point, it's like a boiling frog. We've allowed the pendulum to go so far in a post 9/11 world because of terrorism. And all they'll do is they'll put on the bill, they'll call it Stop the Pedophiles Act. And it won't have anything to do with pedophiles. It'll just be whatever they want it. And we're experiencing that exact thing right now in the United States.
So, okay, so that's another rabbit hole. But I hear you.
I told you I'd go.
Let's kind of do a wrap up. I think we actually have about 7 or 8 minutes. And a couple other important topics. Not that those weren't. That's extremely important. I think we just hit on some hot button issues. By the way, there's a whole category of security, right? Security, risk management, investor protection, and this is another real conversation, right? As I'm participating in a protocol, even in Uniswap or in Aave, and how do we progress these platforms and provide kind of these protections for users so they don't get rugged, so they don't participate in a platform that gets hacked. What do you guys think of that? Rico, did you want to jump in on that one, or Pam?
I will start with that first.
Yeah.
I think the problem is about the scalability, accessibility, and also user friendliness of the platform. We are not there yet. We are still working on that with a lot of projects and products that we are looking in the market. The layer 0, the layer 2, and some of the side chains integrations that we're looking to improve so that breaches of security is not so easy and not so easily hacked among the breaches. Right. And respect Bitcoin itself and the DeFi on the BTC Lightning Network. How many people actually understand how it operates? Do we even have a sharding and zero knowledge proof to improve the robustness and the scalability of these products? And why do people need to know so much when people 99% of the time just want to use the functions? So they do not need to know all this technical knowledge behind the system. They just need to know that it can be done in a simple few clicks. And that's what we need in the market right now in actually having adoption and scalability of all these awesome products, and to educate them, let them read. It's like what we do when we open a bank account, right? We sign a whole list of documents without even reading every fine print of it, and we just say we agree to it.
Yeah.
But hey, let's do that and let them understand and give them a tutorial on how to use these functions. As simple as that is education and awareness to let people understand that they actually have a choice to make here to learn how to protect their assets. They are all, whether it's digital or traditional assets, and they should learn about the digital assets because that's the future. And I'm go back to the last experience I had with my parents when we were traveling in China. They were thinking to use fiat to buy things in the wet market for grocery shopping. And they were happily going out and say, hey guys, you guys need to download this app because when you're in China, you use the app to pay for everything, whether it's WePay or Alipay, use one of this. And they say, no worries, we'll find some, we just go out. And after 2 hours, they came back empty-handed. And they're telling me that this vegetable or grocery seller doesn't want to accept any fiat. They only want us to scan and pay. Mm-hmm. And because they don't even have a small change to give you back if you give them a big note. So that is what we are looking at. In a market such as China, they have digitized the people way back. This is like 5-6 years ago. But only now, when we had a pandemic happening in many countries, people start to realize that, hey, we need to use contactless payment. And this is where I see a lot of opportunities for DeFi and regulators to look into this. And I agree with Daniel with all this bullshit about regulatory is over-regulating the whole industry and is backfiring the whole industry. And a lot of things that we discuss nowadays as VC and investors and incubators, like, why are the projects being harassed by the regulators and enforcers? It's a pure bullying of the whole industry. And it's a synchronized attack. When we look at the events happening in the industry, it is arranged, it's planned. So the regulators are coming together, sitting at a round table and say, hey, we should do this, we should do that, and we should stop all this.
I mean, there's a lot. I think you'd get a lot of support in your position, Rico. I think from your perspective, you also made the point, though, that how can we expect everyone to understand the protocols they're dealing with? Because there's been lots of situations, I'd say, lots of situations where even the protocols are audited, but they get hacked, or they get, these DeFi protocols, maybe not so much getting rugged, because that's less happening now, but hacking still is happening out there. So how do you protect?
What is happening in our industry is been happening in the traditional finance world for so many years. Their hack is much worse than us. The banks get hacked. Many of the centralized systems get hacked. The servers get hacked. But why are you zooming into our few hacks? It's a part of progressive learning and improving the standard and standardization of the tech stack. And which is why we need more white hats to come in to actually, audit them and improve all these things. And I see that as a very good learning curve for everyone in the industry.
So
I don't see that
it's
as
a learning. Issue. Yeah,
it's
sorry
a
about that.
learning curve that everyone is going through, but the regulators are using that as a bad apple or bad practice. But hey, it's happening in your world anyway. How many of your banks are not being hacked yet? How many hacks are you happening every day in your banks? Why are you not talking about that against what we're happening here? So a few exchanges that got hacked versus banks who get hacked on very regular basis. Why are we comparing?
Fair enough. So there's a lot of innovation happening, and as that happens, there's just going to have to be kind of ongoing vigilance and learning as that occurs. I think we're definitely concerned.
This has to be openness by the regulators about all these innovations, and not putting it down. That's what we are
basically sorry to interrupt you, because there's a bit of a lag, but it's basically like building in the open. And with so much of this, these protocols that are launched, they're built with the best of intentions, and smart people do get into them. We've got a couple of minutes left, and I want to make sure that Pam gets kind of the last word as we wrap up here. So Pam, your final thoughts on just the accessibility or trustworthiness of the DeFi platforms, maybe?
Yeah, 2 quick points. No one's talking about the banks getting hacked, because part of having a centralized institution is that there's a person responsible or people responsible, and there's regulators responsible. So yeah, the banks get hacked all the time, or their systems are compromised, but nobody loses any money. No, my money in my account with that bank, I would never know the difference if they were hacked. And that's why it's not talked about. On a decentralized platform, inherently, there's no one central authority who is responsible for it. And inherent to crypto, when the money leaves your wallet, then it's gone. So you can't get that back. So that's why people talk about it in the decentralized finance space. There's actually money lost to consumers versus the traditional banking space. But one way I think that we can protect against it, which is your question, Alan, is I like the bug bounties. So they fit very well in a decentralized finance system, in that the decentralized platforms are built by the developers and the users for the developers and the users. So why not incentivize the developers to find those points of vulnerability in a bug bounty, which is essentially asking a hacker to come and try to hack into your system and providing a reward, a significant monetary reward, if you're able to do that. Then you have them acting on your behalf, and they're getting rewarded for it appropriately. And that fits very well with the decentralized line of thought.
It does. Great great final comment, I think, to wrap this up on this panel. I think that's a great incentive, those bug bounties, making sure that, even though we happen to be at our building in the open and finding, these deficiencies in protocols as they're growing up, there's lots of talent out there that could continue to develop them. So with that, I just want to thank Pam, Daniel, and Rico for a really lively and an informative discussion. I think we've covered a global landscape. We hit trust issues, we've hit regulatory issues and technical. So I want to thank you all and really enjoyed this time with you. Back over to Craig.